Cisco also reported earnings after the close today. The company reporting sales rose 11% to $11.5 billion. Profit rose 23% to $1.1 billion. Cisco CEO John Chambers began a turnaround plan last year, cutting thousands of jobs and streamlining the company. The question now is whether or not the plan is paying off. It has a flashy new ad it rolled out during the NFL playoffs, and Wall Street has had mostly favorable things to say about recent trends at the company. But has Cisco really remade itself?
The most innovative companies are doing things they never could before.
What Cisco hasn't been able to do before is convince investors that its turnaround will stick. Recent earnings reports have been generally well received, but guidance from the company usually left analysts less than enthusiastic. But now, all signs point to a turnaround that really has taken hold. CEO John Chambers summed up what Cisco is focused on a couple of weeks ago at the World Economic Forum in Davos.
If you watch how we focused on 5 core markets, it isn't routing and switching. That's the intelligent networks. It's collaboration, cloud, the ability to really do video and tie it together, change business models. I feel really good where we are. I think the market share gains you saw, if we do our job right, you'll see that in the data center. You'll continue to see it in routing and switching.
And analysts seem to share Chambers' enthusiasm. Wall Street research reports indicate stable demand trends at Cisco in everything from switching to services. And there's optimism around Cisco's cloud computing business. And one analyst goes so far as to call Cisco an underappreciated turnaround story, similar to IBM and even Apple. For more on Cisco's earnings, let's head back out to our Bloomberg West editor-at-large, Cory Johnson. Cory, take it away.
Yeah, thanks, Emily. I'm joined by Cisco analyst Shaw Wu of Sterne Agee, who's got a buy on the stock and was rewarded with that today with today's earnings. It wasn't that long ago people are saying John Chambers has got to go.
Yeah, no, exactly. This turnaround's been grossly underestimated by a lot of people, and he's basically he's turned it around.
I mean, when Emily mentioned her package, that the streets had a generally favorable view on it, but when I talk to people, big cap money managers, they haven't been feeling the love for Cisco here. Where did we see this quarter working? I think what product line, so on.
Yeah. So what's interesting this quarter, the upside was driven almost entirely by hardware, by products, as opposed to services.
Because the services number can always be squishy, right? They can sort of pull forward some service revenues or hold some back if they want to make the quarter and make the next quarter, but not so much with products.
Yeah. I mean, I think this quarter really demonstrates that this is a genuine turnaround. I mean, there's been a lot of doubt, and they've proven the naysayers wrong.
And I think some of the numbers, when you look at that, when you look at revenue growth, I think we pulled up a chart that shows some of those numbers, but the revenue growth numbers look, pretty strong, especially for a company this big. I mean, you could see the turnaround there, or you could see the fall off, and when about Q4 last year, the calendar year, is when they get rid of Chambers. Now he's loved.
Yeah, no, it's pretty amazing. I mean, it just took 2 to 3 quarters, and I think a lot faster than everyone thought, even the bulls. So
well, and the gross margins also kind of dramatic. I mean, it's a basis point situation here. We've got a chart on that too, showing that those gross margin figures. I'll take 61.3 over 61.2 any day.
Yeah, I mean, that's held up a lot better. I think the thing that they've done is they've reduced the costs quite a bit from their products, and that's proven to be, very competitive. Gives them the
cutting costs, holding margin, and growing revenues just means you're selling a lot more stuff.
Yeah, it just gives them, the sales force, more ammo. They can price a little bit more aggressively, but without hurting margins. What
did we learn from the call? And I listened to a little bit of the call and didn't have time to listen to the rest. I was so captivated by Groupon. Which is embarrassing because Cisco is such a much bigger and probably more important company. But there's been so much confusing information about sales into the service provider, into the telcos. Yeah. Are they spending? Are they not spending? Did AT&T pull back, or did everybody pull back? What do we hear from Cisco on this call?
Yeah, in terms of service providers, it actually did quite well. The orders are still good, and frankly, a lot of it is driven by wireless. Just with the iPhone, Android, et cetera. Now, wireline is a little weaker. People are like cutting the cord, and so there's some impact there. But in terms of the wireless, I think that's fueling a lot of it.
And what about Europe as well? Because they've faced competitive product pressure from great products from Alcatel-Lucent. Yeah. Not that you could see it in Alcatel-Lucent stock price, because everyone's thrown baby out with bathwater, thinking that Europe's dead.
Yeah, I thought one of the biggest takeaways from this call is that Chambers actually said Europe is doing better than people think. He's actually seeing some signs of stabilization there. And he says it's really a tale of two cities, so to speak. Northern Europe is actually doing relatively better. Southern Europe, obviously, still tough. But I thought that was one of the big takeaways.
Italy, Greece, Spain. Did he break it out?
Yeah, he didn't name by country, but what he did is he said northern versus southern, and northern is actually doing pretty good.
Very interesting and very divergent story. All right, Shaw Wu from Sterne Agee, thanks for coming over right after the call. Really appreciate that.